Listen into what Chris Woods had to say in case India sees a change in government, a change in power coming this election season. Listen into what he foresees for the markets happening if this happens.
The foreigners, we believe global emerging market funds are only about 1 or 2 percentage points overweight India, which given India's got, in my view, too low a benchmark weighting in the emerging market index, given the the strength of the Indian story, I think that's very, that is not overweight at all. That's very, foreigners could be a lot more overweight India. So any pullback in Indian equities, in my view, will be bought by foreign investors. Meanwhile, that's dedicated global emerging market funds, but there's a whole category of global equity funds who historically have not invested in India. It's now become consensus that the new long-term growth story in Asia is India, not China. But while this is the consensus, global equity funds are not positioned for that. So there's a huge potential for in the next 5 years for global equity funds to start investing in India. The base case has to be a sharp correction if the government's not re-elected. I think the parallel is 2004, which was a big surprise when it happened. This is a market with a lot of domestic money in, and I think that would be a big shock to the market. But I do believe the foreigners would buy on such a sharp decline.